Welcome to Highest Forest. This is where we guide traders from foundations to freedom. So quickly in this video, we're going to look through how we were able to get a 1:30 trade on volatility index 75 1s. Before jumping into the video, if you are here to subscribe to our channel, please give us a subscription. Subscribe down below, turn on your notification, and also please always share your comments with us. If you enjoyed the video, don't forget to like it. If you look on my screen, you can see we have a troll that is actually active right now. Please go and vote and share us your own thought. Vote on your own opinion. Vote your own opinion there for us to know what to do. We just want to do a giveaway to you guys. You guys have been supporting us, so we are over 1,400 subscribers, and we are going to do this giveaway as soon as we hit 1,500. So without wasting much of our time, let's get started. So here guys, as you all know, every day we share the trade ideas to us. So then this is 3rd of May 2023, and we had the setup as early as 5:21 a.m. So we had the setup and we were looking for the sell. All right, so some of us got, and I think just 2 of us were able to trade. I think others didn't because they're waiting for a precise thing. This guy shorted, I also shorted, and yeah. So if you want to be part of the community and always want to take advantage of our daily trade as we share them, to be able to make money while you learn with us, please look in link in description to join our community. So guys, this is volatility 75 1s index. This is volatility 75 1s index, and this is on the 5-minute time frame. Like I said to you guys, this is my day trading time frame, 5 minutes, and then we get the confirmation for entry on the 1 minute, right? So like I always tell you guys, when you come on the chart, you mark the highest point, the lowest point, then you look for the patterns possible that you can see. All right, so when we came today, this was the lowest point because we made the market around this level. So this was the lowest point we had, and we know that whatever we are doing, this is going to be our target if we're looking for sales, right? And the highest point is actually the current side of the market, so we had no interaction with the highest point, right? This is an impulsive end. This is where the correction started, or the price pattern started. So this was the highest point, and that was the current side of the market. So we only had the lowest point to mark. And then now the next thing to do is that look within these points, the highest and the lowest that we have spotted out, and look at the possible price pattern or price channels that is being formed, the current one. So right from our previous swing and this one, we knew that we could connect these two guys like this, 1 2 like that. We had this ascending structures like a low and then a higher low. We had this one. Then the next thing to do is that we have to connect the top side, right? So because of the fact that we know that this was an impulse, it exhausted, we had a little bit impulse, exhausted, and then impulse to the downside. When I decided to put my second line here like this, 1 2. So initially we was anticipating, just like you see in the idea I shared to the community, was anticipating for it to give us a third touch on the trend line before this dip. But as you all know, whatever the market, we are not market makers, so we don't tell it what to do. Instead, we ride along what it's doing, right? So the market actually gave us a sweep on this previous swing point. That's why I told you guys, when you understand the price pattern, try to also understand the swing point. So it gave us a sweep, and then for those people who were keen, and I think it was only one person who took the trade today with us, so he was also on the chart. Someone even asked me today that did the chart play out? Did the market play out? Then I asked him, were you on your chart? So if you're on your chart, when I give you a setup, you don't just wait for exact thing I say to you. You have to go on that chart, look at it, look at the behavior, then you get to understand which of the decisions you are going to make. So we understood too that the liquidity was taken from equal highs, the double top and double bottom people. So they were supposed to be like this, double top, and then they shorted here, but liquidity was taken. So there's a lot of reason for the market to reverse already, even without hitting the third touch of the trend line. So if you want to get to understand how we do, how we utilize liquidity in our trading, please look in this link in the description and come for proper mentorship. All right. So when we got the I saw that the market was giving me rejection back into the previous high, right? So that where I got more convinced is when I got this 1 2 3 candle formed. When this last long white candle closed, that is when I got the confidence that now I have to just go and look for entry, because 1 2 3, if you look at it and you understand candlestick patterns, that is called evening star, and then evening star forming at the high, it is a reversal pattern. That is a powerful reversal pattern. So if I was only dealing with candle patterns, I can just short immediately and then find somewhere to put my stop loss. But I like to do my snapper entry sheet, so I went to the 1 minute to get my entry with our entry criteria. So because we don't teach our entry criteria on YouTube, I'm going to stop right here, but let's go to the 1 minute so I can put the short and long, the short too, for you guys to see how it was, how where we executed. All right, so I got my execution right here, the sell. Then my stop loss was above. Those of you in the community know how and why we execute at that point, and why we always wait for that pullback to happen before we get the execution. And then if you draw down, you can see here 27. Now it's not 27. Where is it? We have to get it exactly. It's 1:30, bro. 1:30. I'm joking, man. So we got that crazy ratio trade, crazy long trade. You see, it is 305 pips. We got that trade, and we just risking just the risk was, today's risk was, what's it called, 10 pips. I'm not actually placing it well right now. If I'm to define it clearly, then it's like I'm showing my entry on here, which I'm not supposed to explain that. All right. So it was a 10 risk, a 10 pip risk, and then a 300 pip target. So that's how we're able to filter the market today. One thing I want you guys to get from this is that the fact, or the scenario of evolving, always try to, don't wait for what you have seen. Try to do what the market is doing. You understand? React to what the market is doing. There's something in, if you have read Trading in the Zone, the book from Mark Douglas, it says always remember to focus on the now moment, the right now thing. What is happening right now in the market should be your concern. All right, so if you like our video, please don't forget to give us the thumbs up. If you have something to share about this, or you have something to say, please don't forget to say your comment in the comment section. If you are not subscribed yet, please give us a subscription and hit us 1,005 so that we can do a giveaway. If you have not voted, please go right to the post and vote. Thanks for watching.